Learning curve, yes.
Anyway, I'm Esther Gulius, the tax lady. This is Ask the Tax Lady, and we want to talk to you about your tax situation, love letters. I know they sent out a flock of those this week. And as you hear, I'm joined in studio with Tiffany Fabian.
Hey there, Esther.
And Christopher Fabian.
Hello, Esther.
So, Chris, let's tell everybody about your wonderful thing when you're on your way to the franchise show.
The IRS
so
seminar.
this is just for those of you that travel very much. You will understand what it's like to be an airline
The angst.
user.
Yes, well, as you know, last week we talked about customer service, and boy, did I experience bad customer service on Monday. Flying to Orlando, Buffalo to Chicago, Chicago to Orlando. Was supposed to leave Monday at 1 in the afternoon, landed in Orlando at 6 in the afternoon. Didn't get in till 6 in the morning, and it ended up with me driving 3.5 hours from Miami to Orlando.
But there
in
must have been
Buffalo,
a big snowstorm or something, right?
the Arctic vortex. I was waiting for that excuse.
Uh-huh.
Got on the plane. Everybody, we're ready to go. The pilot goes, up. Stoppage in Chicago, everybody off the plane. Okay, got off the plane, hour and a half went by, got back on the plane. There was 49 of us on the plane. Big plane, really big plane, let me tell you. 49 people on the plane, they only scanned 48 tickets.
Everybody off the plane again, right?
Everybody off the plane again. Took an hour to figure that one out. Get back on the plane. Pilot comes on, weather stoppage in Chicago now. Another hour and a half goes by. So now it's almost 5:45. All of a sudden,
in the
evening, when I'm almost supposed to be to Orlando now, trying to get flights to make sure I'm going to be in Orlando because I got to be there by 8 in the morning. And then they rush everybody on. They don't even say zone 1, zone 2, first class. They just rush everybody on. We're on the plane, 6 o'clock, pilot comes on and says, well, we're either leaving at 6:15 or 7 o'clock. There's 2 different times we're getting for clearance to take off. So it finally ended in Chicago, and they said, well, there's no more planes to Orlando. I said, what? I was told there was. Oh, no, you have to either stay here or fly to Miami and sleep in the Miami airport. Now, no hotel. No transportation
and they didn't offer
coverage.
Anything, right?
They didn't offer anything.
And this airline's name was?
American Airlines.
So that's just that's Chris's customer service tale of woe.
Well,
those of you that fly.
Well, to make it even worse, I call American Airlines customer service on Thursday when I got back into town. An hour and a half waiting on hold for the rudest person.
But surely they helped you.
Oh, surely. Uh-huh. No, they did not. But after an hour and a half and 20 minutes arguing with the person, she hung up on me.
Isn't that something? But you're not rude either. And I know Chris is a good guy. You know, if it was me, they would have hung up for real because I would have been very angry. Anyway, I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say, even about customer service. And I will tell you, at EG Tax, we really take customer service very personally because we really feel like we're standing between a big, huge federal agency, both of them actually, and the taxpayer. And we just think that customer service is so important. And it is very difficult to get customer service. Basically, they give you a 1-800 number and they just tell you to log in and somebody will get back to you before you die.
Or they give you a website. It's very frustrating.
That's all it is
it's
nowadays.
Very frustrating.
Anyway, we want to tell people of something that was just released today by the Associated Press. The people that are on Obamacare that are getting assistance or have their health insurance through an exchange, this is going to be a complete learning curve this year because, remember, the tax return is going to be the vehicle to prove that you have health insurance. Well, this form is coming out, a 1095A, and if you're on any exchange, whether you're getting assistance or not, you can't file your tax return until you get the 1095A, and the news is right now they're going to be late. So people that need their refunds the most are going to have to wait another week or 2 or 3 before they even get the 1095A.
Right, and talk about frustration because a lot of people are waiting for that refund.
So what can they do if they need their money?
Change
your
their withholding.
W-4.
Yep.
Change your W-4 so that you get your money up front so you're not waiting on the federal government to get your forms, to file your return, to get your refund. And usually this is the biggest chunk of money most taxpayers get in a year. So it's a lot of money, and if you need help, you can call EG Tax, and we'll help you to change your W-4 at no charge.
Yeah,
Okay.
Definitely.
That's sad because there's the predominant people. There's a chunk of population that's waiting for that refund, and this is really going to hurt them.
And that's exactly. They're projecting. I think it's 5 million people are going to be waiting for these forms. So that's a lot of people. I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. We want to talk about tax schools coming up.
Yep. Yep.
This is fall. I mean, when September happens in my head,
Your mind starts to switch.
because
gears.
I know it's tax season in 4 months.
Right,
I mean,
right.
You just got to get serious about the whole thing. If you're somebody that needs a tax plan, you better do it now. If you want to change your W-4 so you get extra money for Christmas, you got to do it now. All those things. And for us, our tax school starts in
Yep.
the middle of October.
It does.
And we have 4 levels of tax school. We have our basic class, advanced class, and advanced, and a treasury card class,
Right.
or corporations, partnerships, and things of that nature. So if you're somebody that has always wanted to understand taxes, we have a great opportunity. There's no charge for the
Class, the
instructions.
course.
There's a charge for the book, which is tax deductible.
Right.
So, and it's really great because it's like a college class. It's all adults on computer. If you don't know how to do computers, don't worry. We're going to show you how to use computers, and it's absolutely great.
Yep, and then not to mention that there's also an online version too. So in case you can't make the classroom, there's always an option to attend the online session, which is a great alternative.
So that's in your jammies kind of.
Right.
You can do it in your jammies.
Yes, we
Yep.
like that.
Yep.
And then the other thing is, for those of you that are interested, that have businesses, or you need help with your bookkeeping or balancing your checkbook or doing your payroll, we have EG Tax Business Solutions, which is a very reasonable way of getting all of your bookkeeping straightened out. And you can call our corporate headquarters for information on that, right?
Right.
Call 632-7886, and Maria heads that up, and she does a great job. She is a whiz kid at doing books and budgets and all that good stuff. And Chris and I also jump in and help, and so it's a great opportunity. You know, Esther always says, if your house is not in order, how can you forge ahead and do that year-end tax return? Right?
Right. And also, sales tax is coming up due September 20th. Don't forget it. If you forget it, they'll hit you with a $50 penalty.
That's right.
Or
send you a lovely $1,000 bill.
Right.
They usually send you a $1,000
Yes.
bill.
And don't forget, if you want tips all week or a week, every week, we put tips on our Facebook account. Like us on Facebook. Go to Facebook, search EG Tax, hit like, and you'll get weekly tips. You'll get our radio show gets put out there weekly too. So if you miss it, there's a chance for you to listen it there too.
And then the other thing is, I had not everybody, and you guys that are not computer literate, you'll know. I mean, my husband, the computer and him are not such good friends. And so it's very frustrating as everything is moving towards the internet. We can give tips to clients over the radio show here, and we'll say, just go and click, and they don't know how to do it.
Right.
So this week I was sitting with a client, and I was telling them, they were talking about their balance on their charge cards and how they're trying to pay them off and how the interest rates is so high. And I said, when they said we're going to have it paid off in about 12, 13 months, I said, well, why don't you get a 0% charge card?
Right.
They said, we don't know how. I went online, got them the charge card, boom, they moved their balance. And so if you need help with that too, you can come into our offices, and we'll be very happy to help you with the internet stuff too.
Yep.
So I'm Esther Golias, the tax lady. Our question of the week is, what income's taxable, what isn't? We're going to talk about that on the other side of the break. We'll see you in a minute. I'm Esther Golias, the tax lady.
That's Bruce.
That's Bruce Springsteen. He's about my age now, isn't he?
I think so.
I know I'm getting younger.
I know.
I'm going to try anyway. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say. Remember, people get bills from the Internal Revenue Service all the time, and when you get a bill, don't assume they're right. because they can only interpret what they get on their end, and they
Right.
key punch in. And many times there's a form that needs to be filled out. There might be a rollover that was done. They're questioning, and they don't question it by saying, gee, we got a question. They question it by saying, gee, here's a proposed bill.
And you know, I have a client who got a big, decent sized bill, and so they just went and paid it. And so the parents are sort of senior citizens, and so I told the daughter, bring in the bill. So my point is, if mom and dad has a bill and they just want to pay it and they can't get out of the house, fax it, drop it off, bring it to us and have us look at it. Don't just pay it.
I'm
It
telling
was a
you.
stock sale,
I'm telling you.
and they didn't know the money.
And, you know, if you just think, oh, I'm going to pay it and be done with it, well, in a year and a half, you're going to get a letter from New York State saying, hey, by the way, and it's going to really, you know, wait a minute, huh? And
then you have no proof. I mean, then if you didn't object and the statute went out on the federal, then you can't win on the state. So,
and that happened to one of my clients.
I mean, and you know, what's so frustrating for me is we don't charge for this service. So if you just call us, we will
Right.
help you. And
Right.
and for those of you that have availed yourself of that, you know that, you know, we just Auntie Esther and the minions here. We all. I know you guys saw Minions the other day. I
saw
would
Minions.
love my own Minion, but I
Oh,
don't
they're
get any.
so cute.
Anyway.
Just
All right, so 8030930, 8030930, star 930 on your cell phone. Okay, question of the week, what is taxable income?
Right.
So
I know
the-
when we're teaching our tax class, that's about how we begin the story, is what is taxable. And so it's very
So
important.
wages, salaries, tips, bonuses, vacation pay, severance pay, commissions, and earned income. That would be like your line 7 income, right?
Right.
Yep.
Pretty much if you earned it, it's taxable, even if it's bartering.
Yep. And then I just wanted to throw that out there. If you're a disabled person and you have disability wages, you could roll up that disability pay to wages and maybe qualify you for the earned income credit. So just
So
another-
if you have a pension,
Pension.
and
Right.
it's a
Code 3.
disability pension
Yeah.
and you're under normal retirement age,
Age.
and you have a qualified child in your home,
Right.
Because this is how taxes are. It's it's like never as easy as you think. Then you would qualify for the earned income credit,
right,
right.
right. Yep.
And probably that would be a person that might be on some type of government program with the New York State of Health. And they're going to get the 1095
Which is gonna be delayed.
which means that they'll file late.
Right,
Anyway,
right.
I'm Esther Galias, the tax lady. 8030930, 8030930, star 930 on cell phone, and we got Kirk from Silver Creek. Hi, Kirk. How are you?
Good.
How can we help you?
I received a tax bill from the IRS for
Okay.
$450
Okay.
saying that my claim on my work W-4
Mm-hmm.
and what I claimed on my taxes is different.
All right. So they're saying that the W-2 income and the amount of income that was reported to them is different.
They said it was involved one of my children. The amount of children that I claim compared to what I claim on my form.
No, that is absolutely incorrect. That wouldn't have anything to do with the W-4. Your children are your children. These children are the ones that live with you. Are you divorced?
No, I'm married, and they're the children that live with me.
All right. So, Kurt, what I'd like you to do on Monday, and there's no charge, if you can scan us or fax us the bill with your phone number and maybe fax us page 1 and 2 of your 1040 form so we can look at it, we'll interpret this for you. And most of the letters are at least partially, if not totally, incorrect.
And your employer probably never mailed you out a corrected W-2 or a new W-2, anything like that after you filed?
No.
No.
Yeah, well, I wouldn't freak out at this point in time. Send us the letter. Send us page 1 and 2 of the tax return. We'll look at it. And many times they're looking at a W-2. Somebody inputted incorrectly. I had one the other day. He got a bill from the Internal Revenue Service, and it was actually for income that was his brother's. They both happened to work at the same company. When the lady was typing up the 1099 form, she just saw the last name, put in that Social Security number, and it actually belonged to the brother. I mean, there's a million things that could have happened. So
Right.
don't worry until we tell you to worry, okay?
Okay.
All right, let me give you our fax number. It's 631 7516.
Okay.
Okay? Thanks, Kurt.
And I was wondering if maybe he had another job. He worked more than one job. I mean,
But
this-
it's talking
But
about
W-4. And,
Yeah.
and the thing is,
they're not going to write about a W.
no, because the W-4, you can claim whatever you want during the year.
Right.
It's the end tax return that matters.
and that's why Esther said W-2.
Yeah.
Right,
Yep.
right. Okay, I'm Esther Galias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say. We're talking this week, like, what's taxable income? Interest and dividends.
Right.
Now, interest is taxed just like wages,
Right.
but dividends, right?
Yep, there's
But-
two different types of dividends.
Qualified and non-qualified. Chris, go on.
Right?
Yep, ordinary or qualified. And the ordinary gets taxed as ordinary income.
Right,
and
just
the
like wages.
Right. And the qualified gets taxed as the capital gains rate.
And if you're in the 15% bracket or lower, you pay 0%.
Correct.
Right? So that's quite a tax benefit. Some disability payments. If you're making your own disability payments, then it wouldn't be taxable. But if your employer is making the disability payments for you, then it is taxable.
That's right.
Right?
Yep, if you're paying for it with after-tax dollars, it's tax-free.
Right. Unemployment.
Right. So that's very important. That's another one of those forms that unfortunately holds up people when they're going to file their return,
That's
as they
right.
still haven't gotten the unemployment form. So when you said the 1095A, I was thinking about also all those people who wait for their unemployment forms.
Also, jury pay and election worker pay is taxable. Strike benefits are taxable. How about those gifts for opening those bank accounts?
Yeah, those are taxable.
Those are taxable, and
So
they'll
it's a
send you a
surprise.
1099,
Yep,
right?
Yep.
Debt cancellation may be taxable, right?
Right.
So those of you that are working out a payment plan with your credit card company, and they say, okay, if you pay us $20,000, we're going to forgive 10. That $10,000 is potentially taxable, and you're going to get a 1098C.
Right.
Right.
Correct.
Now, when is it not taxable?
When you are insolvent for the tax year, that means your assets are less than your liability. So you have to do an insolvency worksheet to see if you're insolvent. Also, I think it's
All right. So let's just explain that, because a
Yeah.
lot of people don't know what that means. I mean, do it in
English.
So
Break
like
it
you
down.
got
You owe
so
$60,000
in debt,
in debt, credit cards, whatever, mortgage,
and your assets are
behind me.
$5,000.
$5,000. Yeah.
Right. So you owe more in
In
debt
debt than
you
you're
have.
worth.
Then you're technically insolvent, and for all intents and purposes, you could be bankrupt.
Yep.
If it was a bankruptcy, then it for sure would not be taxable, right? But in this situation, you would do a special form, and you would make what was taxable not taxable.
Right. And part of it too is, how many people, I looked for bankruptcy and I didn't do it. But that form you fill out to see if you can file for bankruptcy is the form we need to see if you're insolvent.
Right. So that's another thing. I'm Esther Galias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Love to hear what is in your tax portfolio, what's happening in your life. And we're going to go to John on a cell phone. Hi, John. How can we help you?
Hi, I just wanted to let you know, the last caller that called about the letter regarding the W-4, the IRS is putting out a new letter. Instead of sending out a withholding compliance lock-in letter to the employer, they're sending out letters to the taxpayers telling them they have to change their withholding or risk getting a lock-in letter.
With a bill? Because he had a bill.
He
too.
got a bill, though, John.
It's possible. It's possible he got a bill. It's possible he's not having enough withholding. But that letter may be part of it. It's
Well,
something they just
that's
started
good to
this
know.
year.
Right.
So-
Well, this we haven't seen those letters at all. But I will tell you, whenever anybody gets a bill from the IRS, if you take a look, and State of New York, many times it's absolutely wrong. So you send out the correction, you give the form that they need, and everything goes away. But I do appreciate your comment.
Yeah.
Okay,
And to break down what John said, and correct me if I'm wrong, is some people might not be withholding correctly. And so as John was alluding to, they're sending letters saying you have to adjust your withholdings. If not, you're going to get a lock-in letter where we're going to bill you for what you should be withholding.
But still, even if you have a liability last year,
Right.
if you do a 2210 and there was an exception to penalty, you don't have to be intimidated. And
I mean,
many
and
of
it would
these
take
things are
2, 3, 4 years of an ongoing problem before they would send in a lock-in letter.
That's right. So anyway, we want to talk about what else is taxable. How about alimony?
Yep, sure is.
Not child support,
Right,
but
not
alimony.
but alimony, right. So the recipient of the alimony is going to have taxable
And then the
income.
person who's paid the alimony has an adjustment to income. So make sure you take advantage of that.
Now, the person receiving alimony, usually the ex-wife, she would be able to shelter some of that by opening an IRA.
Correct.
Absolutely.
Because alimony is considered for IRA purposes eligible like wages,
right.
right? Recoveries of items deducted the previous year. Explain what that would be.
Okay, you wrote off a stock that said it was worthless, so you claim that loss on the Schedule D last year or the year before. Well, all of a sudden you get a check in the mail, and it's for $5,000 because that stock, they found it, here you go, it's worth money, and they gave you your money for $5,000. Then, because you already wrote it off, you have to claim that $5,000 as income.
Right. That's exactly right. The other thing that is taxable is gains from sales of stocks, bonds, property.
Yeah, and one thing to add, if you have gains from sale of stock, don't forget to, now's a good time to look at those losers and to look at your portfolio and see if there's any losers to sop up some of that gain. So,
Right, especially if you're on a roll this year.
Right.
Especially if you're on a roll.
And, if your broker moves your money, you may not take any money out of it, but they move it from stock A to stock B.
That's a sale.
That's a sale.
No.
You have to report it on your tax return. How many times do we see these letters? I didn't take any money, but your broker
But
moved the
that's
money.
another
and
thing
that's
that
a
we'll
sale.
help you with is if you come in with your brokerage letter, we'll explain what the letter means so that it'll kind of help you so that you can understand that the broker redeemed it, moved it around, took some profits, bought new stock.
Right.
Even though you didn't get any money, it affects your tax return because you have to report that as a sale.
or if you transfer brokers, you go from one brokerage house to another.
they change things.
And then,
they change
but
things.
and on the sale of property, if it's your personal home and you lived in it 2 out of the last 5 years, the first $250,000 of gain is tax free. If you're single, $500,000 if you're filing a joint return. So. And the only other thing that I wanted to mention before we break for news is that if you're gifting property to your children, you should stop in and see us because there will be tax consequences upon your death that your children will get, and nursing homes and things of that nature.
Right.
So I'm Esther Gullius, the tax lady. We're going to take a short break for news. We'll join you on the other side.
Oh, this is an Tom Petty learning to fly.
Wow, I'm impressed, Chris. I didn't know you were a music guy.
There's some little John.
I love music, but I don't know who sings it.
That's usually me.
I
so.
don't care who sings it. I just like it.
Yep.
Anyway, I'm Esther Gullius, the tax lady. 8030930, 8030930, star 930 on your cell phone. And if you've been a caller that called in and we hung up on you, I guess we are having technical difficulties today because there's new equipment in the control room, and the controllers are
running around like
trying
crazy.
to make everything work. So call back. So we apologize if we have been hanging up on you. We did not mean to hang up on you. 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say.
Going back to the sale of the house, I just had a caller this week, has 3 acres of land in a predominant area. And she goes, I just want to simplify my life. I want to sell it. These big companies are coming in offering me money. What's the tax situation? I said, well, what did you pay for it? And she said, about $150. Well, what are they offering? About $480. I said, whoa, that's pretty big. And she goes, yeah, but my house is on there too. And I said, wait a minute, stop right there. Are you selling your house with the land? Why, yes. I said, okay, well, what did you do with improvements? Well, I did a new roof, I remodeled, we did this. Long story short, she did enough improvements. Her gain is about $235,000.
So the whole thing is
thing's
tax-free. Isn't that great?
Yeah.
Just by, if she wouldn't have said her house was on it,
Right.
she would have been prepared to pay
Well,
the government all this extra money.
Well, I will tell you, this is one of the areas that probably confuse people the most because it's so easy to go to your attorney and do a life estate or to gift the house or to gift and nobody thinks about what if at the end your parent, it's usually your parent, never went into a nursing home.
Yep.
Gift it back.
Right.
Because if they gifted it to you, you don't want that low basis. Gift it back to mom because if she's been living there she'd be able to exclude it.
And
on
I
her
think to
thing.
put a personal touch on this, didn't you just recently, Esther, get a letter from the IRS, something about a personal sale of a home that you had?
Yeah, I did.
See,
And
they
summer, no,
don't-
I mean
they
even
don't
write,
discriminate.
They even write to Auntie Esther. They wrote me and said they sent me this great big bill from the sale of my house, but I did the thing. It was tax free. Did the showed them that and so I sent them the copy, highlighted it in yellow, said, "See, this is my home. I lived in it last night." And so then they were happy.
That's good.
But it's frustrating. Who wants to get a letter from the IRS? And if you do, you got they would have been getting $15,000 from me. That's what they wanted.
Yep. And I bet you your heart, as soon as you saw that eagle in the corner,
That's right.
your heart went ta 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 ta
Well, when
ta
it
ta.
says Department of the Treasury, and because it can be something good or something bad. Usually it's something bad. But the great thing is, I went in my office, pulled out my tax return, took my form, photostated it, and sent them a nastygram. And that's really what we want to do. Is we want to help people that are getting these kind of letters, help you so that you're ready for fall. Kids are going to school, all the credits that are available to you. Change your W-4, especially mom and dads who are going to get this $2,500 or $3,000 credit because your kid just started college. I mean, these are things that we want to help you with, and there's no charge for that, So our corporate phone number is 632-7886. Our web address is egtax.com, where you can go online and you can ask questions.
And speaking about school, is FAFSA forms are due, and so
And
we
we'll help
do
you
that
do, for
free of
free.
charge. I know I did one the other day. Chris did a FAFSA form, and we'll help you do it for free of charge, and it's easy for us to do now.
I'm Esther Goliath, the tax lady, 803-0930, 803-0930, star 930 on your cell phone. We're going to try not to hang up on you when you call. Things that are taxable, traditional IRAs. And you have to understand, not only is a traditional IRA taxable, but if you take it out before 59 and a half, you may pay a penalty. How come you may pay a penalty, Chris?
Well, because there's certain exceptions to pension and IRA, just premature pensions and IRA distributions. IRAs, if you first $10,000 for buying a first-time homeowner, defined by not having a home for 5 years, not living in a home. Medical over now 10% of your adjusted gross income. Paying for health insurance if you're unemployed. Paying an IRS levy.
College.
Being disabled.
Right.
I mean, there's a lot. There's about 12 that
exclusions from the 10% penalty.
Right.
So if you're somebody that paid the 10% penalty and you say, "Oh my gosh, nobody ever asked me that," or "I didn't, and I paid the penalty," if it's in the last 3 years, we can fix it.
Right. And you got to be careful. Sorry, Tiff. Some are only from the IRA. Not
That's
from
what
the
I was
pension.
just going to say.
So
Be
you
careful.
gotta
The exclusions are different for the pension than the IRA, so
And-
you got to be careful.
Yeah,
Qualified
before
plan.
you take money out of your pension, we preach this day in and day out.
Please call us.
Yes. Don't do
Because
it.
we will ruin your day because we're going to tell you not to do it. But I'm going to tell you, there are a lot of other places to get money from. Guido the loan shark would be better.
Yep.
Yeah.
I mean,
And if you don't like it because you're Italian, because I said Guido, I'm Italian too.
but I mean, Tiff had a client that took out almost $200,000 to buy a house because he didn't want to pay a mortgage,
Now he's
Mamma
got to
mia.
get a mortgage.
and now he's got to get a mortgage to pay the IRS.
Yep. Yep.
So-
Yep. All right. What else is taxable? Rental income, farm income, net profits from businesses, and that's taxed differently too, right? Because on net profit from business, you also have to pay FICA.
Right.
Right.
Which leads me to, what about side jobs or under the table income? Are those taxable, Esther?
Yes, sir, Bobby.
No.
Yes, they are. Yes,
Oh, my
they are.
gosh.
Right, and then rental income, though, even though it's treated a lot like self-employment, rental property does not have to pay FICA.
Right.
So if you have rental income, that's
Yeah,
not.
and then I also want to toss this out there is if you are doing a Schedule E rental income, make sure that you're charging fair market rent. because if you're not, then income goes on line 21 and you don't get to take you get to take some of the expenses
Up to the income.
Up to the income.
But only if for an itemized.
Yeah. So if you're a rental, make sure you look around what everybody else in the neighborhood is charging for rent.
But what if you like the person living there?
No,
That's bad.
doesn't matter.
See, because the whole thing is, these are businesses. In order for these businesses to get preferential tax treatment, you have to act like a business.
Right.
If you're acting like social services or Aunt Nellie's halfway house, I mean, that's not for profit, right?
Not going to fly. Right.
All right. What else is taxable? Royalties, trust and estate income. Generally, they give you a K-1. Executors' commissions, some Social Security.
Right.
When is Social Security taxable?
Well, it depends on your filing status. If you're single, you add up all your income and half of your Social Security, and all income is even defined as tax-free interest. If you have muni bond interest, that counts also. So you add that all up, and half of the Social Security, if it's over $25,000, it starts to become taxable up to 85%. Married filing joint, same thing. Add up all the income. If it's over $32,000. Then it starts to become taxable.
Right, and that's where if you're working while you're collecting Social Security, it's an absolutely great thing to do is to put money into a traditional IRA. It reduces the taxability many times of your Social Security because you're taxed on that gross amount. And so you actually end up saving money, plus the pension savers credit.
Correct.
And then I also wanted to add in there, if you're somebody who gets earned income credit, don't forget that if you have too much interest in dividends and also rental income, it can disallow or take away that earned income credit. So you want to pay attention to the interest and dividends, because
Of course,
if you're...
it's pretty easy to pay attention to the interest.
Yeah,
There is none. But the dividends are pretty important.
Right.
Yep.
You know, and the Social Security, you know, that's different. What we just talked about was the taxability. A lot of people get it confused with paying back Social Security
Because
for making too much money.
Between the ages of 62 and 66.
Right.
Right.
That's two different beasts.
Right. It's apples and oranges. All right. Notary fees are taxable. Most court awards and damages are taxable unless it's for pain and suffering. Right.
Right.
Prizes, awards, gambling, and illegal income. I mean, that's how they got Al Capone.
Al Capone.
He wasn't reporting his income, and
Right.
all those RICO statutes and everything. Some scholarships, fellowships, and grants. Now, when would a scholarship be taxable?
When it's in excess of the tuition and you get it back, or if it's for room and board.
It has to be for paying the
Tuition.
cost of the tuition.
Yes.
Right?
Yep.
To be tax-free. Otherwise, it's taxable. Okay, so now we're going to talk about happy things.
And then also, I want to throw this out there, if that's okay. There's many times people will call me up and they're saying, I was in a car accident and I'm getting a $20,000 settlement. How much is that taxable? Because we talked about court awards. Most of it, and correct me if I'm wrong, is for pain and suffering, but you want to ask your lawyer and gleam off what part of it might be for lost wages.
That's true, but some of it might be for lost wages. If it's lost wages,
that's taxable. And so you really want to ask your lawyer, ask the person who's filing that claim, and find out what is for lost wages.
And because you're going to owe the taxes on at the end of the year, right?
Yep.
Absolutely.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I hope everybody's going to have a wonderful Labor Day weekend. I'm going to a wedding tomorrow. It's supposed to rain. It's so sad. It's an outdoor wedding.
Yeah, and then also...
I may have to bring an umbrella and galoshes.
I want to throw this out there. All the military personnel, thank you for your service to our country. The reason why is I was just thinking about Labor Day and everybody spending time with their military family, and I'm watching on Facebook everybody flying in. So thanks for all you do.
I was wondering because I'm thinking it's not
not
Memorial Day.
I know.
It's Labor
I
Day.
just wanted
That
to
is for all
put
the
that out there.
laborers.
Yeah,
Right?
they do a great thing for our country.
Right. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. Remember, if there's anything you hear that pertains to your tax situation, anytime in the last 3 years, and you think that you missed it, we can fix it.
Right. We can go back, like you said, 3 years, do an amended return. You know, sometimes, unfortunately, you owe them some money, but it's the right thing to do. It's better you coming forward.
Well, I had a lovely lady that came in the other day, and she is self-employed, cleaning business, never collected sales tax. So we called New York State. She has to pay the sales tax. We're amending all the returns. We're going to ask for a voluntary, because we're voluntary disclosure.
Right.
So we're going to file that form. And she's doing the right thing. She says as we get a little older, my husband says, I don't want somebody knocking at our front door 5 years from now.
And then also correct me if the year is still open, if you still have an outstanding bill that you're paying on and that year is still open and it's beyond the statutes, you might be able to use any refund to sop up some of that bill. Right, Chris? Christopher?
I'm not sure what you asked. I'm not sure what you said.
Well, go ahead, repeat it. Go ahead, Chris.
Do you know what she said?
I'm thinking if you have a refund, the refund will go to pay the debt if you amend the return.
Yeah, if you amend the return and
if you're still paying a debt that's 5 years old, you can still amend that return to reduce the balance due.
Yeah, that's right. The statute is 3 years or 2 years from the date the liability was paid, whichever is later. I gotcha.
The light went on.
Yeah. I'm Esther Goliath, the tax lady. We're going to take a short break. We'll see you on the other side. 8030930 star 930 on a cell phone. We'll talk to you right after the break. Money. Oh, I know that one. Money.
The Stray
I don't know
Cats?
who did it. Who
Is
did
it
that?
the Stray?
It's The Who.
The Who.
The
Pink
Who.
Floyd, I mean. Pink Floyd.
Okay.
Okay, we know it's somebody. I'm Esther Goliath, the tax lady. 8030930 star 930 on a cell phone. We're going to go to... You can turn that down. There we go. We're going to go to Carol in Lancaster. Hi, Carol. How can we help you?
I don't know. I think I'm illegal.
No. Why?
Are you Canadian and not in the States properly?
I wish I was. Then I could collect all those freebies.
Yeah. What can we do?
My husband was in a car accident. Well, two of them technically, and the insurance company was paying us the difference between what he would have made and what he was getting on his sick pay.
Okay.
But they never sent us anything.
Okay. No, you see, that's what's so complicated about tax law. Remember, we said that some disability payments are taxable, and those would be disability payments that you didn't make the insurance premiums on. But since it was part of the insurance that you paid, then it wouldn't be taxable.
Oh, thank God.
Okay, so
Yay.
but we do have your phone number.
So
Carol, and
you're
we're gonna
legal.
We're going to send the IRS to visit you.
No,
you're good.
Believe me, I dealt with them about, God, it was 15 years ago. Before they started with, we'll go to the IRS and it'll be cheaper than what you owe them.
Uh-huh.
No, we paid the full amount.
Wow.
And we didn't even do anything wrong.
Wow.
And
Well,
I will
but you're
never,
good. You
ever-
can tell your husband to stay that those car accidents were good to go because he paid the insurance.
Well, you could tell him, you know what, guess what? They're going to come for you, but not me.
Well, I thank you very
Thanks,
much.
Carol. Have a
Good
great
news.
weekend.
You too. Take care.
Bye-bye.
She sounds like a sweetheart.
She does. Esther Goliath from EG Tax, 8030930 star 930 on your cell phone with Christopher Fabian and Tiffany Fabian. They're married. That's how they can read each other's mind. All right, let's talk about non-taxable income. Most gifts and inheritances are tax-free because most of the time you're inheriting cash, stock with a stepped-up basis, things of that nature.
Well,
the only problem you would have is if you are gifted stuff before somebody passes.
Right. It's the gift and the inheritance is tax-free. It's what you do with it that may become taxable.
Later, or if you inherited an IRA or an annuity,
Yep.
right? Those are taxable,
Yes.
right? Life insurance proceeds are tax-free,
Payable upon death.
payable upon death.
If you
Okay.
cash in your life insurance policy because you need the money, you have a universal life or anything like that, the growth is
is
taxable.
taxable.
gain.
But life insurance, strictly life insurance, tax-free. Child support is
Yeah,
tax-free.
that's right. Tax
And
free.
that's
But not alimony.
not alimony. So if you happen to have a ex out there who's behind in child support because the kids over my house all the time, why do I have to pay child support? But he's paying your alimony but not your child support, you can allocate your alimony to
be
the
child
back
support.
child support and not have
That's a
the
very
alimony
good point,
be taxable.
Chris.
Right.
Very
That's
good
a
point.
very, very good point. So if you're somebody that's supposed to collect alimony and child support, but he's behind, in the child support portion, but still paying alimony, you actually can allocate that to the child support, so it'll be tax-free to the recipient
That
and
would
not
be
deductible
weird
to the payer.
that he's paying the
That would
alimony.
be-
I've seen that.
Yeah, but
Yeah, well, mostly I'm only familiar with the kind where they only pay the child support, not the alimony.
Or they don't pay anything.
Right. All right, certain veterans benefits are tax-free. If
Right.
you had VA benefits, those are
The
tax-free.
disability from the
right.
for-
Or I've seen firemen who have firemen disability, and that's also tax free. Yeah.
Insurance reimbursements for medical expenses are tax-free. Welfare benefits are tax-free, and so are food stamps and all of those kind of social services kind of benefits. So are the benefits going to be for health insurance,
right.
right?
Which is great.
For the person receiving it.
Personal injury settlements.
She moves on.
I do.
Workers' comp is tax-free.
Yep.
All right, some pension distributions for public safety officers who are injured on the job.
Right. Or how about if you are a retired safety officer, if part of your insurance is being paid through your pension, but it's still being in your taxable amount,
Then
you can deduct it from that pension line, not the health insurance line as an itemized deduction, but you can deduct that portion.
And then they write you a letter and say, how come it doesn't match?
Yeah,
And then you say, oh my God, I think it's wrong, but then we can fix it. Scholarships used strictly for scholarships used strictly for
Right.
educational
Now, if you
expenses.
used it for food and housing,
And then it would be taxable.
That's right.
And then obviously return of capital. In other
Yeah.
words, when you sell something that you bought after tax and you sell it and there's no gain, the return of capital is tax free. Roth IRAs,
right?
tax free.
Yep. And I'm
You know,
noticing that this
provided-
non-taxable list is a lot shorter than the taxable.
Yes, they're trying to make money off of us. All right, I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. We're going to go to Jim in Hamburg. Hi, Jim.
Hi.
Hi. How are you? How can we help you?
Good. I got a question about I'm starting a new job and I have health insurance that I'll be getting on my own.
All right.
I won't be self-employed, but can I write off the tax on the health insurance after it's 10% of my gross income? Is it? And can
All right.
I take it through my check still?
All right.
And I
Now,
have
is the employer withholding it pre-tax?
That's what I was wondering because I didn't start yet, and can I have it, put right through the employer, even if I'm buying it from New York State Healthy?
No. Then it's going to be after tax, unless the
Okay.
employer is paying part of it. Is the employer paying part of it?
He is going to give me he is going to give me money for part of it.
But he's increasing your wages for it.
He'll probably either do that or give me a stipend or.
All right. So you're going to pay after tax to your health insurance, which is going to be deductible. Now, your health insurance plus all your other medical expenses, dentist, glasses, prescriptions, mileage to go to the doctor, trusses, braces, crutches, anything else you do medically related, all gets added together into your health insurance. That total is then reduced by 10% of your adjusted gross income, and the excess is what's an itemized deduction.
Okay, so if I make $100,000, I have to have $10,000 in bills.
That's
when
right.
I paid out of pocket,
That's correct.
and then anything above that is deductible.
Correct.
Okay.
All right.
Got it.
All right. Thanks,
Thank you.
Jim. Bye-bye.
I always say that they should have made the medical easier to reach.
I know,
And they
especially
just
now
made
with
it harder.
people paying
Yep.
more and more and
Yep.
more. It's very sad. I mean, I wish we were in Congress.
no-
If we were in Congress, we could straighten out.
But
this
isn't
tax
it
mess.
just a coincidence that you're paying a lot more for health insurance at the same time the medical deduction, the AGI limit went up also?
Right,
So-
except for seniors. Seniors
Just-
that are 65 and
Are
older
still-
last
Few
year,
years.
this
Yep.
year, and next year still has 7.5%.
Yep.
But it's actually much more difficult to use medical as an itemized deduction. And the other thing is, everybody has to start thinking about this. The health insurance has to be listed on your tax return this year, showing that you paid health insurance, or else you are going to get a
Get
penalty.
Yep.
Right.
And if you paid it and you had health insurance and you have lower income, you could be getting a refund, a refundable credit.
Right. That's right.
Yeah, Tiff, you wanted to
I wanted to say, don't forget another taxable item that I forgot is your state refund. Possibly what you receive from New York State or whatever state you reside in could be taxable as well.
Right. If you itemized the year before and the refund's not due to credits that you claimed on that state return. So it's a
You bet your
computation
biffy.
that you have to make. Many people just automatically include their state refund,
Right.
and it's not taxable.
That's right. And really important what you said is Chris is going to make a phone call to our payroll company is you got to make sure you have your health insurance on your W-2 this year.
Because that's going to be something that has to be on
Yeah.
the form.
Right. So there is going to be a learning curve for
A lot of people, and businesses, because businesses have to pay health insurance now. It's not just individuals, but businesses with more than 50 or more full-time equivalent employees have to start paying health insurance. If they don't, then that business is going to have to pay a $2,000 penalty.
Right.
Yep.
Per
Which is cheaper than paying for health insurance.
I'm
So
telling you,
I
'cause I mean, for health insurance, for I think
Well,
somebody sitting at this table, I think it's like $1,200 or $1,300.
And I think
a
we're
month
going
I
to
have pay.
see, we just talked to Jim and his employers helping him to pay some of that health insurance. I think we're going to see more employers doing something
That's true,
along that
because
line.
if you were paying $14,000 in health insurance for a family, for instance, and you can pay a $2,000 penalty, gee, you saved $12,000
Right.
not paying the health insurance.
Right.
And so I think many employers are going to look at that and say, you know what we're going to do? We're going to give you some money on the side to help pay, because it's becoming very difficult.
And I don't know if it's an indication, but it's like thundering out and downpouring out while we're talking about health insurance.
My boyfriend's on the phone. Hey, Larry, this is Esther. How you doing?
Miss Esther, Esther, all I can say is you're beautiful, but you know that already, of course.
What's new?
Well, listen, actually, two fast questions. I know my time is brief. One, in fact, on the medical expenses, I'm self-employed. I know I can deduct all my medical expenses as long as I itemize my deductions. My question is, to be able to do that, do I have to, does my business have to make a profit? And my question, too, Esther, I'm trying to consolidate my investments. I move stock from one company to another. In doing that, I discovered that one stock has an IRS hold on it, which basically means that I couldn't, well, I was told I couldn't transfer it, but I can sell that right. So what can I do to lift an IRS hold?
All right. Well, then you can sell it.
Well, did the IRS put a hold on your account or on the
on the
stock
company.
in general for this company stock because they're getting investigated?
Well, it just in this one stock. But I would like, if possible, I'd like to transfer it, and if possible, because it kind of irritates me.
See, but Larry, you can't transfer stock. You can only sell stock. You have to sell
Or
it. You
gift
can't.
it.
You have to, sell it. But if you want, call our office 632-7886 on Monday.
Tuesday.
Tuesday. We'll do the research for you and find out exactly what you can do with that
Free of
stock.
charge.
Okay.
Miss Esther, LOVEYOU.
Ah, you're so sweet. And have a great holiday.
We have to meet Larry.
I know. I'm going to go to. I'm going to be in Florida,
Georgia.
Larry. We should do a tete-a-tete. I'll talk to you later. Bye-bye. What is a tete-a-tete?
I don't know.
a
I
loud
hope
word.
it's something above the board.
Sounds like a bar I know or a Bear Beauty
I'm
Swap.
only kidding. My husband's listening. He knows that I'm
Is that him
harmless.
who just pulled away?
Yeah,
No.
that's true. I'm Esther Golias, the tax lady. If you need us during the week, you can call us at 632-7886. We will help you. If you got a letter and you're not going to do anything about it, shame on you. We will help you at no charge. Also, during the week, if you need help, you can go to our website at egtax.com. Think about registering for tax school. It's absolutely great.
Like
And
us on Facebook to get tax
yeah,
tips weekly.
Larry, you better like us on Facebook. And if you need us, you can go to egtax.com. There's all kinds of information on our website to help you with your situation. But if you're in that situation, love letters. The other day I had a taxpayer came in, the IRS levied her bank account, called the IRS. They were just getting her attention, fixed it. They released the levy. I mean, we will help you. And until next week, have a great Labor Day.
Labor
right?
Day.
All right.
I got
God
you
bless.
confused.
Bye-bye.